Hey guys, I'm back in the UK and I'm off to Cardiff today to go check out Learn to Trade. You know, the one with Greg Secker, the guy you're always seeing him on his adverts telling you how he can make lots of money in the stock market. So we're going to check out his strategies today, and then we're going to test them in Tradingview, see if they actually do really work long term.
With a stop loss 1 pip above the high of the high test bar and a target level of a 1-to-1 reward to risk.
Performs the risk management, trading size calculations for you. Again, let's go talk to the guys at the back of the room. I don't know how many of the 50 are left, I'll have to tell you. I know they've been running events like this for these last few days.
I'm now home and it's time to actually put this into practice, and we're going to test it over 1 year's worth of trading on several different assets so that we can see whether or not this is going to be profitable for you, and more to the point, how profitable is it going to be for you. Okay, so the breakfast breakout strategy. This is going to be your bread and butter for making money with Learn to Trade and Greg Secker. They do have 6 strategies that you get with their system, and we'll go into how much it costs and everything like that in just a moment. But this one is obviously their flagship strategy. So it's the one where you're going to get the most, because just like a trailer for a movie, they're going to put all the best bits into what they're going to show you up front to make you want to buy the movie, right? Or go watch the movie.
You're bleeding, man. I ain't got time to bleed.
It's exactly the same with marketing stuff like this. They're going to show you the very best strategy up front, so the other 5 are probably going to be worse. So let's check it out. This is the breakfast breakout strategy. What you have to do is nothing at all, okay, for the first hour, right? You don't do anything for the first hour. You just wait to see in the morning just where the market goes, okay? So like what we have here, so we're going from this one. This was a trade. So in the first hour of trading, you should be on the 5-minute chart, which means you're going to be looking at 12 candlesticks. So from this candle here at 9:30 in the morning when the market opens, all the way through to this candle here at 10:30, you're going to be measuring from the bottom to the absolute top. And what you want to do, according to Greg, is buy the top, buy the most expensive price, and have your stop loss set at the bottom at the lowest price of the day, and that is then your risk. So if it does reverse back down, you get stopped out at a loss, and the risk that you're going to put on is going to be a 1-to-1 basis. So if we take a little trade here for this one, we'll bring this one all the way down to where we're going to get stopped out, and this should be a 1-to-1 ratio. So if we're going to risk losing $100, we're also going to possibly gain $100. So it's 50-50, like a coin flip. And as that plays out through the day, you can see that eventually we got to the end of the day, which is why it says EOD, and it was flat. So we never got stopped out at the bottom and we never took any profit. We just close out a very small profit. But what you will notice is that not all of these 1 day's worth of tradings actually have a trade being played out there. But taking a look here at the chart, you can easily see that not all of these trades have an actual trade playing out. See, this one here has a trade. We'll have a look at that one in just a moment. That's quite a nice one. And the reason why is they only want you to be going long when the market is actually trending in an upward direction. And how they clarify that is going to be using moving averages. So they use the exponential moving average, an EMA, so that when this small one has broken through the bottom here, this means that you then tending to be in a bear market, so they're not going to actually put on these trades down here. And good job we didn't, because obviously we would have made a loss. And probably same again here as well. You know, if we bought here, we'd have ended up making a loss, so it wouldn't have been worthwhile. So we're only going to be taking out these ones here where the small line is actually above the thicker blue line here, and they're just 2 simple moving averages, i.e. the closed price averaged out over a certain period of time. Very, very basic. So just to clarify, the breakfast breakout strategy, before we go in to see actually how profitable it is, because I have automated this to do it on a whole year's worth of data on several different assets, let's just make sure you've got exactly what we're doing. So we know that the thin blue line is above the thick black line, just two moving averages to make sure that we're trending in an upward direction. And then we use all of the little 5-minute candlesticks from the 9:30 open all the way out to the 10:30. So that gives us the high and the low. And with that, what we can do is we open on the highest, most expensive price, and we'll close out if it goes to the low for the day, making a nice loss. And then we only have a 1-to-1 ratio, so we're either going to make 50 or lose 50. And as we can see here, we've opened this and went through the day and made a small profit on this one. However, let's be honest, you could have left that run maybe to the next morning and made double that profit and got a 2-to-1 ratio rather than a 1-to-1. As you can probably tell, I wasn't very convinced with this strategy, but this is often the way with strategies. Sometimes they don't appear to make a lot of sense, seems to contradict common sense, but then when you actually run it out over time, it turns out that actually it's very, very successful. So as you can see here, I wrote down all this code. Then I can give this to you if you want it. Do let me know in the comments down below if you want any of the code, any of the strategies that we're using here today. I can set you up on Tradingview, and you can use these to your heart's content, but you may not wish to. Okay, so with oil, we've got 25 trades in. So basically you've been there every single morning from August, 5 days a week, Monday to Friday, trading every single day, and you've lost $38. The profitability here is 56%, so basically not much more than a coin flip. Not surprising given to what this strategy is. Profit factor obviously pretty low, but that's just one asset class, that is oil. So let's not just write it off straight away. Let's have a look now at Intel Corp. So Intel, you can see here we got buy and hold, that's the thin blue line. Okay, so the thin blue line is what happened if you just bought it and held the stock. Compared to where you are if you actually trade in using this strategy. So buy and hold, you'd be up 1,755, and if you actually use this strategy, you would be actually down $918. Switch over to Cleveland Cliffs. Again, we've got a little tiny gain on that one, just 126, and then we've got another gain here for Renault, which obviously saved you from making a very steep loss, because at the end of the day, what we're doing here with this strategy is we're only using a very small amount of risk. So the default, they say, is going to be 2%. So don't risk more than 2% of your equity on each trade. So we're going in here with just 5% of equity. However, to be honest, we're not actually risking the 5%. Because if we do get stopped out, we're only losing a very small amount of that 5%. So you could up it to 50, but these numbers here are just going to be multiplied. So these losses of losing 1,000 is just going to be multiplied, and it's going to be even worse. So if it doesn't work at 5, it's not going to work at 50. We've got VW. That's not looking good. Stellantis, they make like Peugeot and a bunch of other cars. That's also not looking good. And so I think our assumption of this strategy was pretty right. You can't buy in at the top of the first candle and sell at the low and expect to make a profit day in, day out, only risking 2% on a very silly strategy. But is it because we're trading stocks? So I checked out their video and it says this.
The reason why I like this trading strategy are most traders struggle with these 3 simple questions: what to trade, when to trade, how to trade. Okay, so what to trade, we are going to be focusing on indices. Before we head,
that's right, so they're saying to use indices instead of stocks. So I went back just to double check and checked it with indices. So this one here is the NASDAQ, so Facebook, all those sort of things. You can see we've made again a very small profit of just 98 over 30 trades. S&P 500, we've put on 116 trades, and we're down $170, so barely making anything at all. The Dow Jones, 100 trades in, and we're down $200. UK 100, FTSE 100, we're up. So this is not particularly good, but don't worry, because not wanting to ruin this video and have it be complete trash, I've done a very simple strategy that you could do instead. So this is the results from the breakfast breakout strategy. On average, 66 trades, profitability 44, and this is what you'd get if you bought and hold. I think about 70-80% of those trades over the last year have gone down on those stocks. So had you put in 50,000, which is what it was set to, is to trade $50,000, you would be down quite a bit on that right now. But with my all-weather strategy, all-weather trend trading, just uses two simple moving averages. This is actually up 16,800. Okay, so we've got the breakfast strategy. This is all the stocks traded here, and obviously we're down quite a lot, and the profitability is like a coin flip. It's like just going in and betting on red or black on a casino every single morning is pointless. You're never really going to make any money trading like that. Or you've got this one, the all-weather trend tracker, which I'll give you here. This is my very quick alternative strategy that you can use. You can see here it buys a low and sells kind of a high-ish. Not always. Sometimes it will buy here, sell over here, buy here, sell over here. Here you can see one of the moving averages that we use, and basically you're buying, selling based on two moving averages. It's a very simple strategy, one of the most simplest you could use. And down here now, if we go into the stats, so you can see this one, we're up above the if you just bought and held. In fact, let's just go up here to oil. You can see again, oil, we've done much better using this all-weather trend tracker. Intel is up as well. This one a little bit down for Cleveland Cliffs. Renault, obviously it's above. Nike was above. VW, we're doing pretty good. Stellantis also doing well as well. Down for CV, Alcoa is up, and BG's about the same. It doesn't seem to work on the indices and stuff, and the reason why is because, as you can see up here, we want volatility, because if you want to make money in the markets trading, you're going to need volatility, right? You want something which is going to go down and go up. You don't want to trade in indices, because an indices is just an average. It's all the really great stocks like Nvidia, which have gone up like crazy, and also the really bad stocks which have gone down like crazy, and then it's just an average right across the board. So they're pretty flat. I wouldn't recommend trading indices if you want to make money. Trade individual stocks which are really booming, and you'll have a much easier time making money. And there you go. That's how all the stats there stack up for the all-weather trend tracker. And unfortunately, unlike Greg Secker, I don't have something like this Smartcharts system that you can buy into. If you did want to buy Greg's, I can tell you right now, his money losing system here, which has lost over 5,000 over the last year trading using his breakfast breakout strategy, that's going to cost you £1,995 just to get in, just as a starter. And then it's also going to cost you £69 per month to use this Smartcharts system. That £69 per month is going to total up each year at £828. Now, from the look of it, from what we saw in the actual seminar, it looks like they're using some of the data and some of the tools from Tradingview charts. This here being Tradingview, you can do anything you want with it. It's very flexible. I've been using it for years now. I don't even know, like 5-7 years, something like that. I've been a premium member. And if you wait out for a Black Friday deal, Cyber Monday deal, as I just have, having recently let my premium membership lapse over the summer, it is just £200 for 13 months. Okay, so £270 for 13 months, or you can pay the full like 700 odd pounds per year if you don't mind paying it, which I don't normally. I thought I could get away with not paying it. However, once they stopped it, I realized just how much I actually do use those features, and it is really cool. And if you're a coder like me and you can code and back test different strategies like this, it is super useful. You can see the performance, you got all the trade analysis here, the performance ratios, a full list of every single trade which would have been carried out using the strategy. Tradingview is fantastic. I love it. And if you do like these strategies, if you want access to any of these strategies that are used here, if you think it's going to be better for you, do let me know in the comments below, and I'll try and find a way to actually give you access to these strategies so that you can use them in your own trading. I don't mind doing that because these numbers that you see here for the all-weather, I'm actually doing something much better than this. This is just a very simple strategy, and if this is better than what you're doing, hey, you can have it. Okay, just let me know in the comments down below, and I'll find a way to actually get you to get that in Tradingview for yourself. You can follow it, but for me, I do something else, something a bit more profitable. Maybe I'll let you know about it in the future. Do let me know in the comments down below. I'll see you again in the next video.